Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie Townsend, president of Advantage Retirement Group.
Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie Townsend, Southwest Florida certified financial planner professional, here with Pastor John Antonucci, and we do have a lot going on. We're going to give you some statistics that you are not going to want to miss, and we're going to give you some tips that you don't want to miss either. So welcome to the show and stay tuned.
Yeah, good morning, Southwest Florida. Great to be with you in studio, Alfie, and whether you're planning your legacy or preparing for the next phase of life here in beautiful Southwest Florida's paradise, Alfie's here to guide you every step of the way. So either grab a pen and paper or just lean in and listen, because today's show is packed as always. And before we dive in, Alfie's got something extra special for our listeners today. He has a high net worth toolkit, and it's designed exclusively for affluent retirees and those that are pre-retirees. And you're going to receive some paperwork and information that will help guide you through the fog of investing. It's going to have tax reduction guides, estate planning, large IRA strategies, charitable giving, and so much more. But you need to be one of the first 9 people to get your complimentary toolkit right now. There's 9 available that you can pick up. Just pick up your smart device, text the word KIT, K-I-T, to 239-747-1077. Again, that word is KIT, K-I-T, to 239-747-1077. Alfie, a lot to talk about. The president's over in London, England. Jerome Powell has slashed the interest rates, not by what Trump wanted, but at least it's a start with anticipation of 2 to 3 more by the end of the year, right?
Yeah, I think Trump wanted 2%. Yeah. He's a character.
Take it right down to 0.
Yeah, take it right down to 0. But yeah, it brings it from 4 to 4 1/4. So we did bring it down a quarter. They were anticipating more than that. Now, what he did say, like you were saying earlier, that it looks like it could be maybe 1 or 2 more, and that's what drove the markets on Thursday. Is because Wednesday we had the rate cut, but then Thursday came and said, you know what, he did say 1 or 2 more possible cuts by the end of the year. And that's what the markets wanted to really hear. Now, let's talk a little bit, John, about what it means, why it's so important to have these rate cuts. It's not just what it's going to do for the housing market, the credit cards, but the housing market is going to be great. In any business, if you think about it, any business that's borrowing money, if you could get that down 0.5% or 0.75%, that would be big, if you're a business owner. But where it really helps, what Trump really wants, is that the debt that we're paying every year, you're talking about 0.5 point would really save, $170 billion, that would not be having to be paid out.
Yeah.
That's a lot.
Sure.
And so a whole point would be, 1% would be, $330 billion that would be saved, not having to pay on interest. So that's like paying your house off early. If you ever looked at the amortization of how much interest that you pay on your home, it's like sickening. And with the government, though, it's that much worse. So yeah, that is a very important, and that will get the economy up and running again. So again, I'm going to talk a little bit, John. There's some things about jobs and the job unemployment, people filing for unemployment was ticked up. And then they went back. For September, and the Bureau of Labor Statistics really admitted that the economy only it created 911,000 fewer jobs over the last year than originally reported.
So they're just putting out numbers, whatever they wanted in the last administration.
Well, this is the last year.
Yeah.
I mean, Trump's been in this administration.
But they were doing the numbers, so obviously the numbers were inflated until he fired that person.
Yeah. So these are less. This is something. This is why he wants to have someone that is going to do the job right, because you can't have a mistake of almost a million jobs that were less jobless claims that was reported, and you have to add them back in. So that's not good. it really creates, that means about 76,000 fewer jobs per month. So about 22,000 new jobs created per month. Now, these are, this is not what you want. This is not what you want. But, the thing about it is this. Trump has only been in there, 8-9 months, right? So you're looking at a thing that he had to fix, a country that he had to fix, and it's not going to get fixed overnight. And people have to realize that it is not going to get fixed overnight. But then if you listen to Scott Bessent, I think that's his sharpest advisor there, and the Treasury, and he said that the fourth quarter is what you want to look at, and we've talked about this. Fourth quarter is what you want to look at because all the money that has been coming into the U.S. for factories, for investments, from companies and countries, it's going to create the fourth quarters when you're going to start to see it. So these jobs that are losing, you're going to start to see, I think, big gains. And I think you just have to give it some time. Like Scott's saying, is you got to give it some time, but that's going to pour over to next year. So I think the market has a lot to look forward to.
Yeah, I think, and what you're saying as far as the rate cuts, let's assume he does go 2 to 3 more by the end of the year. For our listeners that are out there that are sitting in, a CD maybe at 4%, that's going to affect them as it comes up for renewal. I mean, what is the option for them to make a move by the end of the year so that they can be positioned? Because a lot of money is going to start flooding into the market, isn't it?
You're right, and we have income, people that are just wanting, like CDs or interest, and they're getting like 3.5, 4. We can give them, believe it or not, 2 to 3 times what the CDs are paying, with something that has a lot of protection on it and something that's only a 2-year type of investment. So we're talking, you can get 12, 15% on something. You could use it for income, or you can use it just to roll it over and do dollar cost averaging. But people take it out, then you get your principal after that 2-year. And if you want to know more about that, and anybody listening needs to want to learn more about this, because this is real interest, real money, and it's and we're not talking about an annuity or anything like that. We're talking about a true investment that you can get your money out of after 2 years, and you start getting income right away. If you're looking for income, looking for investments, 12, 15%, that is guaranteed, and it's guaranteed, and we'll show you exactly why it's guaranteed and how it's guaranteed. And is it tied to the market? Yeah, it is tied to the market, but I will show you how it's protected. That's what everybody wants to know. So give us a call, and John will give you the number. But if you're looking for income, this is a way to do it. That's what we're doing with our clients.
Yeah, you're dealing with Southwest Florida's premier financial planner professional with over 40 years experience as a certified financial planner. He's also a fiduciary, which means the responsibility is to you, not to any products or services that he offers here through the Advantage Retirement Group. Listen, if you've been listening to us a long time and you haven't made an appointment to visit with Alfie, what are you waiting for? I mean, the market's about to make a change as these interest rates are cut, and he can give you institutional pricing, which you can't get anywhere else really on your own if you're an individual investor. You want to sit down with him in Fort Myers or Naples. He has what's called a retirement simulator process, which is a deep dive into your current portfolio that will show you what's really going on. Alfie will put your portfolio side by side with his and take you back 5 years. You're going to see 5 years prior of yours and 5 years prior of his investment strategy, and you'll be able to make a wise decision right there, because he's going to expose any hidden fees that are eating up your returns. He's going to make sure that you're allocated properly, that you're diversified correctly, not taking undue risk for the amount of return that you've been getting for the past 5 years. He's going to make sure that you're rebalancing at the correct time so that you stay the same asset classes and mixes that you desire based on your stress level, or based on your factors of what you want to be in as far as bonds and the market, so that you can sail into retirement. So if you're soon to be retired or even currently retired, sit down with Alfie in Fort Myers or Naples. Be one of the first 9 people to text the word VISIT, VISIT, to 239-747-1077. You want to be one of the first 9 because Alfie can only handle 9 per week in his office with his team here. He has an incredible team. Text the word VISIT, V-I-S-I-T, to 239-747-1077, or go to savingtheinvestor.com. Again, savingtheinvestor.com. You'll find a wealth of information about him and his company and all the products and services that he offers here through the Advantage Retirement Group. Stay tuned. We'll be right back right after this break. Welcome back to Saving the Investor with certified financial planner Alfie Townsend. You know, Alfie has a complimentary copy of his book, Making Waves in Retirement, available for those of you that have been listening. If you haven't picked up your copy yet, what are you waiting for? It's your roadmap to a fulfilling retirement packed with valuable insights and real-life stories from investors that Alfie has helped. But listen, we only have 7 copies available today, so you need to act now. Just text the word BOOK, B-O-O-K, to 239-747-1077. Claim your book by texting the word BOOK to 239-747-1077. Alfie, the one thing that's interesting is that inflation is still hanging around. I mean, I went into Costco again this week. The ribeye steaks have went from $17.99 to $18.99. I mean, what is going on? I mean, we've got to get this under control. It's only around 3%, isn't it? So, I mean, you would think it would stabilize.
Yeah, you would. But I will tell you this: if you look at beef, I talked to my friend who owns a ranch, and it's called Next Level Gin, and it's a pretty big beef company. And I said, what's happening? Why prices so much? And he says, the young people love beef.
Yeah.
He said the demand is so it's more. It could be more demand.
And it's running out because, I mean, Piedmontes, you can't even get rid. You used to be able to, I used to order from there, and basically you can't get it.
So you have the demand for beef is big. So it's not just inflation on that. So, you got eggs that came down, right? So you have something. So beef might not be a good example of inflation.
Right.
Yeah, that could be supply and demand on that one. So, but you're right. There's a lot of things that you go to a restaurant, and again, you're paying more right now than I just don't remember ever paying more at a restaurant than what I do.
About $100 a head. Well, you like that fine wine, that.
Yeah, but take that wine out, it's still pretty expensive. So I look at how does a young family do it? Just starting out.
Oh yeah, and then to buy a house. I mean, the American dream. I mean, we need to move into the golden age because we need to bring the American dream back for those young people.
We got to get income up. And speaking of income up, before the last break, we were talking about how we can create income for our clients. But I want you to listen very carefully on this. We can create income. The minimum is right now at 7.5%. But what we're able to do with some of our clients, you have to be accredited investor. That means you have to have a certain dollar amount, but we're able to get them 15% on income, and then that means that it leaves so much more money out to invest because their income needs are if you're taking income at 4%, if you have $3 million, that's only $120,000 that's going to create. Well, $120,000 at $3 million, we can give you $150,000 at $1 million and have $2 million to invest. Think about that. So we can give you the same income or more income even with a third of the money. So this is what you want to really consider. If you never came in here, I know many of you have given us calls and you come in, but you really need to come in and just, even a 15-minute phone call to come in and let us explain what we can do for you that you are not, currently doing. Because right now, income planning is the most important thing. Rates are going down. The Fed just lowered the rates 0.25%. He said there's probably going to be 1 to 2 more by the end of the year. That is going to devastate your savings and your CDs. So, give us a call. John will let you know how to do that. Give us a call, and we can see if this is right for you. But if you can get 7.5% up to 15% for income, and the commitment's a 2-year commitment, for 15%, that's not bad. And then what happens? We look at it again and say, hey, what do you want to do? You want to do it again? And everybody seems to want to do it again. Okay, so just have an open mind. Take 15 minutes. Really, give us a call and see if this is something for you to create that income that you're needing, and everybody needs, really, with, like you said, with inflation, everything going up. But let your other money work in the market, because you don't want to take income from a growth portfolio. You want that growth portfolio to go up and down, do its thing to make that 10, 15, 20%. But you want the investment for income not to have those big fluctuations. So that's what we do here at the Advantage Retirement Group.
Yeah, even if you have a burning retirement question, you want to take a few minutes just to talk to one of Alfie's trusted advisors here at the Advantage Retirement Group, all you have to do is text the number 15 to 239-747-1077. It'll take you to a landing page, and you'll be able to reserve a complimentary 15-minute strategy call on a calendar. It's really a quick and easy way to get clarity on the one thing that's keeping you up at night about your money. If you're uncertain about some of these things, or you want to find out about what Alfie's talking about, where you can get 12 to 15% on your money over the next 2 years, this is a great opportunity for you to give someone a call, talk to one of his trusted advisors here in the office, take 15 minutes and find out more about it. It's really going to be beneficial. Alfie's going to add value to you and your portfolio. You have nothing to lose and everything to gain. Pick up your smart device right now. Don't hesitate. Text the number 1515 to 239-747-1077. Again, that's number 1515 to 239-747-1077. And you'll have a strategy call with a trusted advisor who will answer some questions, maybe bring some things to the table that you're not thinking about, because basically, a lot of times once we ask a question, that can open up the door to a lot of things that people really have in the back of their mind that they say, well, maybe I don't want to address that, but there really isn't any question that you can't answer in the financial realm.
Yeah, and you could either say, hey, listen, I know I need to come in because my plan, I don't have a plan. Come on in. You can just call and set up an appointment. But if you just want to know more about questions and what we do different and stuff like that, give us a 15. Let us just do a 15-minute phone call. You could do that too. So whatever there's no pressure here at the Advantage Retirement Group. There's just absolutely no pressure. We're going to we help a lot of people, and there's a lot of people I say, what you're doing just fine. Just keep it where it is. So that's what you could do when you have a successful firm.
Right. Yeah.
Okay. I want to say that again. That's what you can do when you have a successful firm, is you're not going to do business with everybody, and you don't want to do business with everybody. I want to make sure that our clients that we do business with are really like-minded, like us.
Sure.
I want to make sure, because we introduce them to our clients, and that's why our client get-togethers at our events that we have, and a lot of these clients take their phone numbers and hang out together because they're like-minded. And I want to be able to speak my piece when I'm with clients.
Sure. Yeah.
I don't want to hide anything. So that's that's why it's important to see if we're a good fit anyway.
Well, if you don't believe in free markets, you're not going to be doing business. I mean,
that's right. You're right.
If you don't believe in capitalism and conservatism, that's what really drives the markets.
Yeah. It isn't. And speaking of driving the markets are doing very well. And does it mean that at their all-time highs, does that mean that it has nowhere else to go but down? No, that means that there is a lot of room. Remember, there is trillions of dollars that is not really partaking in this market yet, because there's going to be factories that are being built. There's going to be wage increases. That's going to be happening. There's going to be technology that has to be bought for all this money that's coming over here. So I do think we are in the golden years, but right now we're not feeling it. You can see, when you have credit card debt at an all-time high, when you have still this, if you think about it, our debt is very high, but then we had a surplus.
Sure, the tariffs are bringing it in.
The tariffs are bringing it in. So we have something that we haven't really utilized first, in a long, long time. And Trump is utilizing the tariffs, And so it's a whole different ball game, and it's a businessman running the show right now. And I think you're going to start to see some rewards like you did when he first got here. The market was doing fantastic, and then COVID came. And the same thing here. The economy is going to start ticking up, but right now it's going through a little bit of hurt.
Yeah. Well, that's why you want to be positioned and you want to be ready for what the changes that are going to come. And one of the ways that you can do that is by picking up Alfie's High Net Worth Toolkit. It's really designed for affluent investors and those that are retired and soon to be retired. You want to pick this up because inside this toolkit that you're going to get, it's got information on how to reduce your taxes. It's going to give you estate planning, information, going to talk about large IRA strategies, charitable giving, and so much more. And the complimentary toolkit can be picked up for you by simply texting the word KIT, K-I-T, to 239-747-1077. There's 9 available that I'm looking at. And if you want to pick up one of those 9 that we have, all you have to do is text the word KIT, K-I-T, to 239-747-1077, and that toolkit will be in your hands. It will help you navigate the fog of investing and get you to where you want to go, give you great information, great insight, great wisdom that Alfie has put together over his 40-year career that will help you get through to and through retirement. Stay tuned. We're going to be back right after this break, so don't go away.
Welcome back to Saving the Investor. You are listening to Alfie Townsend, Southwest Florida Certified Financial Planner Professional, here with Pastor John Antonucci. And we are just really talking about what the markets did this past week and really what to look forward to in the future. I think we have a bright future. There's so much positivity that's out there that I see from really our managers that we do business with. They see that even though the market's at a all-time high, that's just another really mark to increase to the next high, because there's a lot of room to run. There's a lot of good things happening out there. And once the people start making the money that they will be making, they're going to have increases when these factories are built, construction, interest rates are down. You're going to start to see the housing market start to go up again. That's when you're going to see the economy really starting to rock and roll. So I'm looking forward to this, John, very much so.
Yeah, and definitely, we're on track. And like you said earlier, we're only 9 months into this administration, so a lot of great things are happening. The tariffs are bringing in money. We still have a little bit of, fragile balancing act to take care of, and consumer spending is still strong, and it's fueled by debt and job house rises, which is always sustainable.
Yeah.
So we're in a position where the markets are moving forward, and let's shift to the markets. What did Wall Street do with all this news of Powell, of the job weakness we talked about, of the inflation and consumer spending? Well, what are the markets looking like?
Yeah, well, the markets are doing good. They would have liked to have seen a little bit more than 0.25%, but then why they had a nice little run on Thursday was because you have the 1 to 2 more additional rate cuts by the end of the year. So, I think you're going to see that, and if you do see that, you're going to see again housing, people that's going to be that's holding off on buying a house. And I tell people, I have mentioned this a few times when I'm on every Monday with Daybreak with Jason Jones, and I talked to him about this a few times where, if you're looking for a house here in Southwest Florida, there's many houses on the market. There's many houses on the market right now, and that rates are going to go down. But what happens when rates start to go down, those prices start to go up again, the housing prices.
It'd be better to buy now and refinance, wouldn't it?
I would rather buy now and even put it at I'm more of a fixed type of, interest rate person. But if you get an adjustable right now, that makes more sense because we're in a down market, more pattern than a up interest rate pattern. So why not go ahead and get that house while you're getting a good price on it, and then you can refinance down the road after it keeps going down. Rates keep going down, but you don't want a fixed rate when you're at a 0% interest rate to get a adjustable rate at a fixed interest. When interest is at 1 or 2, you don't want to do that. You want to lock that in, but we're not at that point, I think, to lock it in. But this is the time to because prices of the homes are going to start going up again when the demand's going to be there when rates start to go down.
Sure.
So that's why you have to, get that home. If you're really looking at getting a home, this is the time to get it. I think this is definitely a good time to get it. The prices have come down quite a bit. There's still room to wiggle in there, so think about that. But let's look at the Dow. Finish. This is after Jerome Powell said, "Hey, listen, we're going to cut it a quarter." Yeah, the S&P and Nasdaq fell a little bit, and then that Wednesday, and then the Dow was up a little bit. But then on the other hand, the next day, the markets really looked at what was happening and said, he did act like there's going to be one or two more rate cuts, Jerome Powell, at the end of the year. So they really reacted and had a nice little run on Thursday. So, but year to date, let's talk about year to date. This is the S&P is at 12, a little over 12%. Nasdaq is 15. Dow Jones is working its way up. It's at 8% now. But if you take for the past year, what the S&P has done, it's at 17.5%. So that's not bad for 1 year. The S&P is up 17.5%. How about the Nasdaq? 26%.
Yeah, that's amazing.
Almost 27%. And then the Dow is 14% for the year. Now inflation is at 3%. So your goal as an investor is to really beat inflation. That's what your goal is, to beat inflation and stay ahead of inflation. So if you're in the market is going to be the best inflation fighter there is.
Inflation.
Now people say, how about gold? Gold has been good for the last year or two. I will say that they're having a nice run this year, 40% or whatever. But if you look at the history of gold, it is not inflation fighter. It's just not. Doesn't pay dividends. It costs to get out of it. It costs to get in it. Okay. And a lot of people, where are you going to store it? Unless you're going to buy an ETF, gold ETF. I'm not saying we don't have gold in our client's portfolio. We have a little bit. We'll have a little bit of gold and Bitcoin as part of one of our portfolios. But the bottom line is you do not want to be heavy in gold.
Right.
I just don't see it. I just, the market. If
you're not going to see those kind of returns that you just talked about, if you're diversified and even in those three asset classes, I mean, you're doing pretty good.
You're doing good. But if you go the past 5 years, John, 10 years, you look at what gold has done the last 20 years. It's like what people look at is what's happening now. They forgot what happened.
Those are the people chasing sectors that you talk about.
Those are that we talk about. You don't want to be a sector chaser and stock picker,
track
market
record
timer. You're bringing back some old things that we used.
Are
to
we
say.
Talking to anybody out there that's chasing sectors? Because that's not good, is it?
Yeah, because what sector did good, or what really asset class that did good last year has no bearing on what it's going to do next year. We used to have a chart that we used to show, and all the different asset classes. You got gold, small cap, large cap, international bonds, and all that. And it would always, who was the leader last year? Well, that leader last year typically is not going to be the leader the next year. It just isn't.
Yeah, it's like playing the Powerball numbers that came out last week. I think
that's a good example.
I think the same ones are going to come out.
Yeah, because it won yesterday. Let's do it again.
Yeah.
But it usually doesn't happen. And you will get lucky every now and then. But yeah, let's talk about NVIDIA. NVIDIA is definitely the stock. We have a lot of NVIDIA in our portfolios for our clients. Apple is probably one of our bigger holdings for our clients. But you got Tesla. I'm going to talk about Tesla. Everybody knows, NVIDIA has been on a roll, and AI boom. They are. They're still double-digit returns, and they're just a great company. And now they're investing in the UK. Trump was there last week this past week, and they made a deal. You have Google investing over there. You have a lot of money that's being invested over there, but it's a partnership that they're solidifying. You saw how they treated President Trump over there.
Oh my gosh!
It was like they even
like he was the
knighted
king.
him, right? They
Yeah,
knighted
is he
him.
the king?
Yeah, right. And they just love him there. You didn't see the protesting like they did the first time, because they know. I think this freedom of speech is pretty gaunt over there right now.
Right.
I mean, they're having a big trouble there. So people are liking him over there, and so but you saw a lot of our companies investing over there. And what it is, and why he needed to do this, is because China is trying to get in bed with them bad,
Right.
and it's not going to happen.
No.
Could you imagine them doing that for Xi? No, it's not going to happen.
Yeah.
Not going to happen. And so, United States has a warm place in the heart for them over there, and they're putting their money where their mouth is. But they invest a lot with us too. So I think they're going to tweak the deal with the tariffs. So they're going to make it work, and that's what I'm saying. But why Tesla had a nice little bounce earlier this week is that Elon Musk put his money where his mouth is. He put $1 billion back into buying stock. His Tesla stock drove the whole market up and drove the Tesla stock up. So there's a lot of exciting things happening, John. If you're not in the market, or if you don't have an income plan, let us show you what we do here, and I will put us up against any firm out there that I will show you that we can create income for you, and we can grow your money, and you just have to give us that time to meet. And that's, give us a call, or, for that 15-minute phone call, or come in.
Yeah, let's start with the 15-minute conversation. I mean, before you even come in, because if you've been wondering whether your retirement plan is truly built for the opportunities ahead that Alfie's been talking about, now is the time to find out. All you have to do is text the number 15 to 239-747-1077 and schedule your complimentary 15-minute call with Alfie and the team here at the Advantage Retirement Group. Listen, this is a quick, focused conversation. We'll get to know your situation, answer any questions that you may have, and determine whether you're a right fit to help you protect and grow your wealth. And then you can make a decision whether you need to come in or not. Whether you're preparing for retirement or you're already retired for many years, Alfie's strategies are designed for affluent investors who want confidence, clarity, and a plan that works as hard as you did or you're doing right now. So simply text the number 15 to 239-747-1077. That'll take you to a landing page, and you'll be able to see a calendar, and you'll make a 15-minute appointment to talk with one of Alfie's trusted advisors or Alfie himself. It's the fastest way to see if Alfie can help you achieve the retirement you've worked so hard for. Text the number 15. Be one of the first 9 people right now. Text the number 15. Don't wait till the end of the broadcast. Pick up your smart device while I'm talking. Text 15 to 239-747-1077. That's 15 to 239-747-1077. You also can go to savingtheinvestor.com. Again, savingtheinvestor.com. You'll find a wealth of information about Alfie, his company, and all the services that he offers here through the Advantage Retirement Group. Stay tuned. We're going to be right back right after this break, so don't go away. Welcome back to Saving the Investor with Southwest Florida's premier financial planner professional with over 40 years' experience, Alfie Townsend. Listen, if you're ready to take a deep dive into the retirement strategies Alfie talks about each week, he's got something special for you. Today, he has 9 complimentary copies of his book, Making Waves in Retirement, available to our listeners. It's your roadmap to a fulfilling retirement, packed with valuable insights and real-life stories from investors that Alfie has helped over his 40-year career. That's why he named this broadcast Saving the Investor, to save you, the individual investor and strategist, from the pitfalls, the schemes, the traps of Wall Street. But listen, we only have 9 copies here in the office. You need to act now. If you haven't picked up your book yet, what are you waiting for? Text the word book, B-O-O-K, to 239-747-1077 to claim yours. Again, text the word book, B-O-O-K, to 239-747-1077. Grab your copy before they're all gone. And Alfie, as you said, President Trump met with the UK investment announcement that he made. A historic investment was taking place over there. A lot of people may not know about it. Why don't you talk about that and let the people know exactly what took place?
Yeah, there was $205 billion, 150 euro.
Love the euro. We love the euro.
We love the euro. Yeah, I mean, Trump visit was really welcomed with open arms, and no wonder why, because there's a lot of he had the cream of the crop there with him.
Yeah.
He had NVIDIA there. He had Microsoft there. He had, these are all companies.
Apple was there.
Apple was there.
Yeah.
These are companies that are helping them get up and running with AI, and AI obviously is, and that's where China, I think, wanted to step in and take over,
Undercut us because
undercut us. But
whoever
Trump
gets there first, like the moon, right?
Yeah. Trump is obviously, he is a businessman, and he sees things, and he just surrounds himself with great people.
Yeah,
he really does. He surrounds them, and that's what our listeners out there. The people that I remember, the kids that I hung out with as a kid at a time that I was just not a good kid. I was just a 12-year-old punk, I would call myself. 12 and 13, I hung out with the wrong group of people. And then when I stopped hanging out with them, I went to a new group of people that were, they were involved with sports. They were family oriented. They were just good kids. And that's when my life started changing. And the same thing with him. He hangs out or surrounds himself with smart people and forward thinkers.
Right.
And that's what you want. And that's why our country is going to be just fine. That's why the stock market's going to be fine, because he, again, is, when you're taking out regulations, common sense decisions, less regulations, less, stuff that you have to go through. Look at the regulations in California right now.
Oh, my God. Yeah.
Those poor people after the fire they haven't
even... State Park, they can't even, and he's talking about putting low-income housing there, which is crazy. He's out of his mind there, Newsom. Yeah.
Yeah. I mean, how can you do that? I mean, it's, but anyway, so yes, a lot of investments, like we talked about, is going to UK, and that is going to really, it's going to just, really drive business here too. It's just not,
it's a global thing.
It's a global business, global economy. It's just,
you're invested globally, right? I mean, your products that you offer to people is global, international.
And speaking of this, why international is doing so good right now is that the valuation of those companies are low, which is good. And then you also have the dollar is a little weaker than the euro, so it's a deal to buy international stock.
Right.
And that's why we have international portfolios up over 20% right now.
Nice.
So you have to have, again, we talk about asset allocation, diversification, and you don't want everything. We go back to the you go back to the really the tech bubble.
Right.
Let's go back to the tech bubble where that was like
Sun Microsystems. I'll never forget losing a lot of money.
Yeah. And all these companies that people lost money for, but these companies had no valuation. They had no substance to them because they were just starting out. But these tech companies now have, they're making money, making products, employs a lot of people. So it's a total different ball game, and you don't want everything in one sector.
Right.
You just don't. But that's why our income producing portfolio is, if we can get 12, 7.5, 12, and even up to 15%, depending if you're a accredited investor. And if you can get that kind of money, you can afford to invest in other sectors and grow that money and not touch it while it goes up and down for income. Now, people don't understand that. When you work, you have income. You don't have to touch your portfolio and your dollar cost averaging in your 401k. But when you're not working is when you need to say, okay, I need an income plan. Where's that income coming from?
Right.
You got to ask yourself, where's that income coming from? And if you don't know where that income's coming from, then you need an income plan. And that's what we do here at the Advantage Retirement Group. We're going to put an income plan together for you where it makes sense, and usually we do it with 1/3 of the money than what you're currently doing it with. That means you're using 50%, 70% of your money to get income that you're needing, when we can do it with 25, 30%. So you're money can grow for you. So this is, it's important that that 4% rule, it doesn't work anymore. It doesn't work anymore. Inflation is high. You need more money than the 4%.
You're at 3%, so you'd be trying to live off 1%.
Yeah, you just can't do it.
Yeah.
Your buying power is going to go down. I can't believe our show is almost over, John, but there's a lot more to talk about.
Yeah, no doubt about it. And you want to create an income plan. If you haven't created a strategy for income in retirement, like Alfie said, if you can get 12% or 15%, annual on your money, what would that do to your, lifestyle right now? And basically, the markets are doing well, everything's doing well, but a lot of you are sitting on the sidelines and you haven't taken advantage of having a complimentary review to see what's really going on. Really all you need to do is start out with the 15 minutes of your time. 15 minutes can make a vast difference in your retirement. And if you've been wondering whether your retirement plan is truly built for the opportunities ahead, maybe you don't have an income strategy or a plan that Alfie's talking about, now is the time to find out. Listen, all you have to do is text the number 1515 to 239-747-1077. Schedule your complimentary 15-minute call with Alfie and the team here at the Advantage Retirement Group. In this quick, focused conversation, we'll get to know your situation, answer any questions you might have, and determine whether we're the right fit to help you protect and grow your wealth. Whether you're preparing for retirement years down the road or you're already in retirement, Alfie's strategies are designed for affluent investors who want confidence, clarity, and a plan that works as hard as they do. Listen, don't hesitate. We're about to go off the air in just a couple of minutes. Text the number 1515 to 239-747-1077 right now. It's the fastest way to see if Alfie can help you achieve the retirement you've worked so hard for. Text the word 1515 to 239-747-1077.
Thanks, John. This was a great show. There was a lot that happened this week. We were, I guess, wondering for the last, few months, what's the Fed's going to do with interest rates? And a lot of people thought they were going to do more than 0.25%.
Imagine if he didn't cut anything. That would have been crazy.
Well, if he didn't cut anything, it was almost 100%. It was 96% certain that he was going to cut something. And he's concerned with inflation. I understand, because inflation is still it's ticking up a little bit. But the main thing he saw was the economy slowing down, and that's what the Fed's number one job is, to keep people employed. And when you start to see the unemployment going up, that's a scary sight. But again, I feel that we're going to be just fine in that aspect when these trillions of dollars that rolled into the United States as investments from other countries and companies, that is deployed, and you're going to start to see it. Like Scott Bessent said, it's going to be the fourth quarter is when you're going to start to see things change. So I'm looking forward to the fourth quarter. I'm looking forward also to the market. Just because it's at an all-time high, I've been saying it doesn't mean that it doesn't go higher. We did have a big pullback in April, May. We had a pullback this year already. So it's not like it's been a constant year going straight up. So it does have up and down, and that's good. That's healthy for the market to have pullback and then hit a new record. And speaking of Saving the Investor, have you ever seen our TV show? If you never have, it's on every Sunday at 11 o'clock, 11 to 11:30 on NBC, following Meet the Press. And of course, here we've been on 92.5 for a long time, and we have a new segment every Monday on Daybreak with Jason Jones. Listen to us at 7:37. Until then, be blessed.